Welcome to today's market report.
The US economy continued to create jobs at a solid pace in August, but wages growth slowed and the unemployment rate ticked up, surprisingly adding to tentative signs of a slight cooling off of the labor market. Non-farm payrolls rose by 315,000 through the middle of the month, a slowdown from July's 526,000, but clearly ahead of consensus forecasts for a 300,000 gain. Wage growth also eased by more than expected, with average hourly earnings rising only 0.3% rather than the 0.4% expected. That was down from 0.5% in July. As such, the annual rate of earnings growth stayed at 5.2%, well below the current rate of inflation. This growth brings total non-farm employment 240,000 higher than its pre-pandemic level in February 2020. Job gains in professional and business services, healthcare, and the retail sector are notable. Even so, the pandemic continues to leave deep marks on the economy, even after a fall of 300,000 in August. Some 1.9 million people across the country were still unemployed because their employer closed or lost business during the 2-year reign of COVID-19. Another 500,000 were still kept out of the labor force altogether by its consequences. Analysts said the slight decline in wage costs and an increase in the labor force participation rate would take a little of the pressure off the Federal Reserve, pointing to some modest relief on the inflation front. Having said that, they added the report was broadly consistent with other data showing the labor market is still relatively tight by historic standards. Data earlier this week showed a surprising increase in job vacancies in July and another drop in weekly jobless claims. All told, many US labor indicators remain very strong, and the ones that looked the most problematic a few months ago are bouncing. There is really nothing to make the Fed relax and pivot. GBP/USD remains confined at 115. Euro/dollar is at 1.009.
This is today's market news. Thanks for listening. We'll see you next time.